let's move on and talk about the big story of the hour, and that is Reliance Q4 numbers, which have just come in. If you look at the numbers right now, consolidated margins are 18% in line with estimate. Net profit actually is 5 to 600 crore higher than what the street was actually estimating. Revenues in line, EBITDA is in line. Mayuresh Joshi will join us in moments from now. Also pull up how the results are actually. If the stock has ahead of the results, pull up the intraday chart if we can, because the stock actually ended at days high going into the numbers. So clearly there was a element of beat which is coming in. Deven Choksey is right here. Deven bhai, good evening. Thank you so much for your time. How do you read the initial numbers coming in, margins on expected line, but the net profit looks slightly higher? How do you see it?
Ajay, I think I may request you to give me some numbers download because I'm traveling, so I may require something.
Sure, I'll read it out for you. Yeah. So almost 18,900 crore is the profit number which has come in. Consol revenue is 2.36 lakh crore versus our polo 2.34. The other profit and revenue number on the consol front, margins have come in at 18% right now versus 18.1 which we were expecting. What's your reaction, initial reaction?
Yeah, numbers largely in line with our estimates. I think we had budgeted about 36,000 crores, and I think revenue has actually come on that front. EBITDA, I think somewhere around 42,200 kind of a 40,200 crores. I think kind of EBITDA number that we had budgeted, and I believe it's more or less in line. And the PAT numbers are slightly higher. Maybe partly due to, I think the other income components which probably need to see a breakup. But otherwise, I believe that the larger amount of growth, as far as our estimates are concerned, is coming in from the two areas. One, of course, I think the retail. The retail on a quarter-to-quarter basis as well as on the year-on-year basis, the numbers are looking, quite strong to us. Maybe I would like to see the detailed numbers. And the Geo numbers have come up, and I think they are about 13.5% higher compared to what the last year it was. So more or less, I think the numbers are going in that direction. The two numbers, the oil and gas and the retail, they should be showing the significantly large amount of jump compared to the last year. Once we see the breakup, I think we'll be in a much better position to talk about.
Deven, I will urge you to have a look at the numbers. We'll just come back to you in 2 minutes. Let's also get in Sanjiv Bhasin, who's joining us also on the phone line. Sanjiv, RIL is something you look at closely. The stock today ended at days high. With this kind of a performance, do you think there is near-term bump up possible or mostly baked in?
Yeah, good evening. Ajay, to tell the stock price would be difficult. Large part of the good news may be in the price. Generally, Reliance, after the results, is in a range. But I think the numbers are definitely ahead of what everyone was expecting. And all quarters seem to be good. Geo's done well, retail has done well, OTC has done well. And OTC, I think, must be much ahead of what the street was making out. That has been the key. And 42,000 EBITDA, I think at 18% margin is very, very strong. So I think all guns blazing, Reliance has come on with very, very good numbers.
Must tell our viewers that this particular quarter was slightly tough for O2C because the environment itself was slightly challenging, but especially for chemical prices front, we all know what's happening there. But even polymer demand was slightly on the lower side, but perhaps they have actually done some amount of smart buying because of which the contribution is okay. Do you see O2C side of the segment start improving from the coming quarters, or it may remain slightly softish, Deven, because the environment is a bit challenging?
Well, I think few corrective steps have been taken. I think you mentioned about the O2C business. I believe that the China dumping which was there, to an extent, I think it influenced the prices, and that has remained soft. But somewhere, I think in the middle of March or maybe end of February, the government has put in some anti-dumping duties, and that is where probably some of the chemicals which are going in for the textiles, they have actually now shown relatively better amount of price realization. So hopefully, I think whatever the worst which had to happen, I think in the last quarter is the past, and I believe that the current quarter onwards, we should be seeing a steady to better improvement in the numbers and the margins, particularly the POI in particular. So I think things should be looking up relatively better for Reliance going forward in this quarter.
Joshi is also joining us. Mayuresh, we were discussing the O2C part of the business, but let's come to the consumer end, which is retail and Jio. Jio in particular. The ARPU end is mostly flattish, but the subscriber addition is okay. And now everybody is talking about telecom because there's a big tariff hike which is due by mid of this year by other players. I'm assuming RIL will also join in. What do you make of the performance this time, in especially the Jio end?
Evening, Ajay. So I think it's a very steady state performance. So if you look at both the margins on how Jio has performed on a quarter-on-quarter basis, a tad bit lower. The subscriber additions, as you rightly pointed out, in line with what the street was expecting, and absolutely a flat number on a quarter-on-quarter basis as far as the ARPUs are concerned. So I think the expectation in terms of ARPU increases is a given for the telecom industry as a whole. And if that happens over the next few months or the next quarter or two, I think there will be a significant accretion that comes through in terms of the overall performance. So I think the kind of flattish trends that you're now expected to see specifically in terms of top line, as far as Jio is concerned specifically, I think that can show significant amount of improvement. The other aspect also is in terms of the enterprise part of the business for Reliance as well. And on that aspect, I think as the numbers start growing through across India, pan India as we call it and see it, the expectation of that also contributing to overall EBIT performance of Jio should start going higher. So I think it has been a steady state performance as far as Jio is concerned.
Well, there's a very big hope also getting built in for Jio, and that is something which perhaps Sanjiv can add weight on. Sanjiv, there's I think a note from one of your colleagues as well, but in general, the street is expecting some IPO action also coming in from Jio platforms. Is that a fair estimate, the way things have, how the business has built in?
I think it is from our institutional desk, difficult for me to comment on that. But I definitely think that some businesses like Jio, if the realizations come and the listing comes, it will be a game changer. And that is what the management has actually indicated. So, they want to segregate some of the businesses and, from OTC, retail, Jio, some of the platforms can now be listed, which can make for greater, sum of parts value individually. And that could be a game changer, according to me.
I would request you to please wait with us. Deven, in particular, I want to discuss with you the retail end of the business, the EBITDA at which 5,800 crores is the kind of EBITDA. I want to talk about that one with you. But before that, my colleague Somit is here. The lowdown on all the key numbers. How did they fare versus our estimate? Somit?
Well, on a consolidated basis, if you see Reliance Industries revenue and EBITDA was pretty much in line with what the street was estimating. The growth on the revenue and EBITDA front on a sequential basis have been around 5% but the net profit growth is on the higher side around 10% but that is purely on the back of higher other income on a sequential basis. Now, if you see segment wise, the O2C segment EBITDA, that is the oil to chemical segment EBITDA, that has come in around 7% higher than what the street was expecting. On a sequential basis, if you see, the growth is around 19% to 16,777 crore rupees. Now, this could be on the back of higher throughput, higher refining margins and better petrochemical spread. But on the negative side, if you see the retail segment EBITDA, that has come in 7% lower and this is also below what the street was estimating. The number is at around 5,829 crore rupees while the street was estimating this number to be anywhere close to 6,200 to 6,300 crore rupees. So that has come in negative for Reliance Industries. The O2, the oil and gas exploration business numbers are also pretty much in line with what the street was estimating at around 5,600 crore rupees. On the telecom business, if you see, which had reported numbers an hour earlier, they were also pretty much in line, 2.5% growth both on the revenue and on the EBITDA front. One negative part on the telecom business was the net free cash flow to equity was negative even in the full financial FY24, and that could be one of the reason why, if you see on a sequential basis also, Reliance Industries total gross debt has increased from around 3.1 lakh crore to 3.24 lakh crore rupees. To sum it up, if you see, the O2C segment has beaten the street estimates, retail has come in below street estimates, oil and gas exploration, while the telecom business were pretty much in line with what the street was expecting, and on an overall basis the numbers have come in pretty much in line with what the street was estimating for the fourth quarter of FY24.
So that Somit, so Deven, I was talking to you about Reliance Retail. We understand that electronics has done well, lifestyle was okay, and store addition continues here. Now, in light of again the environment, some of the other peer group retailers are showing mixed performance. What's your outlook on the retail end of the business, and if any view on EBITDA as well from here on?
Yeah, I guess I think the EBITDA is marginally lower. I don't think that I think it is significantly lower compared to what probably was expected. And there can be variety of reasons for which I think the EBITDA is slightly lower. One of them particularly could be, I think, the reason pertaining to the revenue mix. In some quarters, I think normally you find that I think the revenue mix is basically, I think, towards the low yielding margin products. And that could be one of the reasons for which I think it may happen. Now, quite possible that I think in this quarter, because of the higher demand for white goods, you might see the current financial year first quarter, the entire thing would reverse in favor of higher amount of revenue mix and which is yielding better margins. So I am not very particularly excited or otherwise as far as I think the numbers on the quarterly basis are concerned. What I would like to see is that I think number of what you call store contributions coming in on a month-on-month basis and a quarter-on-quarter basis, if it is on a higher side, which in most likelihood it is, then in such situation, I think I believe that the retail will continuing to grow better performance. In fact, 19% kind of a growth on a year-over-year basis, I think is a reasonably strong growth proposition that we are talking about in case of retail. Wait and see how exactly I think further detail comes out on the revenue mix side in the presentation. So overall, we remain pretty confident about the retail segment and Jio platform particularly, as far as I think the consumer-facing business are concerned.
Added almost 11 million consumers, subscribers this quarter. But Deven, you made a very valid point on electronic retail, particularly consumer durable air conditioners. I mean, this weekend they had splashed all the newspapers with, some offers of booking air conditioners at 1 rupee. So clearly there's a very high demand on consumer durable. Mayuresh, to watch out for from here on, next 2-3 quarters, what are the key 2-3 things you would watch out for from Reliance? On which stock performance will depend on?
Ajay, I think the expectations in terms of the oil to chemical business as an example, and as Deven Bhai was pointing out, what has happened largely in terms of China, the demand probably in terms of the downstream products, specifically the petchem part of the business, that should show signs of improvement as we head into the second half of this calendar year. So I think those inherent green shoots will start coming through, and that should start exhibiting in some steady performance going ahead as well. For telecom, again, the ARPU increase is a very critical component to watch out for. And therefore, I think as these aspects on the telecom side of the business are taken care of, along with the entrenchment of the enterprise part of the business as well, I think that can add significantly in terms of the sum of parts. Last but not the least, the other retail-facing business, Reliance Retail, as you were just discussing with Deven Bhai as well. I think a large part of the expectations in terms of the size that Reliance has now built in, specifically for the retail business, you're looking at almost 79 to 80 million square feet. You're looking at 18,800 odd stores. You've got a registered customer base which is 304 odd million, which is 31 odd crore people, and more people are probably getting in. More technological support coming through for all these elements put together as well. And therefore, I think all these three segments should start having a very steady contribution as far as the second half is concerned. I think all these elements, as they start playing out, should effectively work out on numbers.
Sanjiv, what's your target, next 12-month target on Reliance?
Sanjiv? Well, Ajay, notwithstanding the election results, we can see volatility. I don't rule out 3,500 to 3,700 coming on Reliance. Three things stand out. One, China has bottomed out. If you see commodity prices, metals, that is seeing very, very strong demand. Specialty chemicals as such will again come back. And I think the China destocking or over inventory may be done with. Two, you have ARPUs at 181. Now, who thought that 130, 150, 170, 181? I think ARPUs are headed above 200 if what Bharti is indicated. And that will be the real icing on the cake. Third, we have not even talked about the new energy business in which Reliance is expanded very, very strongly. And that is again going to be a game changer as far as solar, green energy and the likes. These are small contributors, but some of part they could make up the case for individual segments to do extremely well. And OTC now is a cash generator. So if all these three things work, then I think a 20% upside coming by the end of the year for Reliance is definitely on the card.
I'll ask you to have the last word, particularly on the core oil and gas and refining O2C business outlook with what's happening in crude, with what's happening in demand. Do you think these guys at this end of the business will contribute meaningfully from here or remain under check?
So overall, I think oil and gas part of the portfolio remains quite steady. I don't think that I think it has changed majorly. The oil throughput, I think, is also quite significantly increasing, and that is what is going to be contributing majorly to the earnings of the company going forward as well. The current contribution would be somewhere around 5,000 crores, I think, on EBITDA level, which might, for oil and gas exploration, I'm saying, which might probably, I think, reach in the direction of around 6,000 crore EBITDA per quarter basis. So to a greater extent, the rating is expected to improve. In my understanding, I think current rating on EBITDA, which is close to around 42,000 crores, I think could improve to around 44 to 45,000 crore kind of a improvement in EBITDA easily in first 2 quarters. And then subsequently in the second half, maybe I think some different numbers could be talked about. So overall, I think nothing changes. The growth remains very, very strong. And I believe that retail and digital will have higher amount of contribution to talk about in the consumer-facing business, particularly on the EBITDA side.
Excellent. Thank you very much, all three of you, Deven, Mayuresh, Sanjiv, all three of you, to help us understand the performance this time and how the stock could behave and the factors which will be responsible for that going forward. We'll take a short break.
If you like this video, then like, share and subscribe to ET Now.